Welcome to the Fall Investor Newsletter. This one is titled Zigzagging Continues. The longer-term momentum of the stock market is still up, but investors may have to withstand a bit more indigestion before the next intermediate advance takes hold. More importantly, the stock market appears to be experiencing significant sector leadership changes. Previous leadership, the early cycle industries, including banks, REITs, and utilities, have weakened considerably. Emerging leadership is shifting into mid and late cycle areas, including industrial, manufacturing, technology, and energy companies. The current stage 4 of the business cycle historically favors these new outperforming groups, many of which are inflation beneficiaries. One important intermarket relationship that illustrates the stage 4 leadership change is our ultimate inflation-deflation ratio. This measure compares the CRB Spot Raw Material Index with the iShares 20-year Treasury bond. When this relationship is moving higher, inflation-sensitive investments, like commodities, are outperforming deflationary-sensitive investments, bonds, on a relative basis. And when this ratio is moving lower, deflationary-sensitive securities are outperforming inflationary-sensitive investments. History illustrates upward reversals typically indicate multi-month or even multi-year strength in commodities. Recent information illustrates a breakout of this ratio after vacillating the past 12 months. This behavior confirms our opinion that the inflation-sensitive sectors are poised to lead the market going forward. In addition to being favored in this part of the cycle, these sectors have strong long-term fundamentals in their favor as well. We'd like to elaborate on one very encouraging, game-changing global economic event, namely America's drive toward energy independence. America will flex its energy muscle very soon when domestic oil production exceeds imported oil for the first time since the early 1990s. In the past half-dozen years, domestic production, thanks to revolutionary technology taming unconventional oil fields, has surged dramatically, completely reversing a nearly 40-year decline in U.S. oil and gas output. This production surge is only in its early stage, with many years of increasing output ahead. The U.S. is already the world's largest producer of natural gas. Sometime in the next 4 to 6 years, the United States will most likely take over the mantle from Saudi Arabia as the world's biggest oil producer. Dependency on foreign energy is being radically reduced for the United States. And what are the investment implications for investors from this modern-day gold rush, only black gold this time? For starters, the boom is adding millions of jobs to the economy, initiating a manufacturing renaissance, improving the balance of trade payments, and drastically reducing OPEC's oligopoly power. Those are just a few of the world game-changing investment considerations. From our point of view as portfolio managers, we believe technology and innovation are going to drive investment profits to the providers of drilling technology, domestic oil and gas producers, pipeline carriers, and especially the equipment service companies. Pring Turner already benefits from this domestic energy boom, and we look forward to further adding companies to your portfolio that profit from this tremendous global shift in energy production. Looking ahead, leadership changes often take place in the midst of market corrections. The goal during the next stock market correction is to take advantage of these new leaders breaking out from the pack. Our plan is to gradually adjust portfolio allocations by reducing cash positions and bringing the stock allocation higher. We welcome the opportunity to add quality stocks with attractive valuations and strong fundamentals that take advantage of this inflationary part of the business cycle. Thank you for your confidence in placing with us the important responsibility of protecting and growing your wealth.